Hello traders, welcome back to Your Nifty Guy. I hope all of you are doing well. In today's video, we'll quickly decode what today's Nifty's price action is really telling us and then build a clear rule-based Nifty trade plan for tomorrow, specially designed for intraday and weekly expiry option traders. I'll walk you through the important levels, the market structure, and how I'm planning my option strategy step by step. So you know exactly what to do if the market opens strong, weak, or sideways. No guesswork, no overtrading, only a simple, repeatable process you can follow every single day. And if you trade Nifty regularly and want practical trade plans that focus more on execution and risk control than predictions, make sure you like this video, subscribe to this channel, and share it with a trader friend who needs more discipline in their trading. And before we begin today's analysis, the link to the Telegram channel is in the pinned comment. Make sure you click on that and subscribe to that as well. I will be sharing in my views related to the stock market as well as relevant news and information that pertains to the stock market and the trades that we take out on that channel. So make sure you are subscribed there as well. Now, let's get straight into today's charts. The same thing is happening again and again in Nifty. If you observe from the last 3 days price action, the range is different, as in the portion of where they're moving is different, but then the structure is exactly similar. We are opening with a gap up and then moving in a sideways territory, sideways, completely sideways. Now, I did not trade today. My driver unfortunately got bitten by a stray dog in the morning, and I had to send him off to the hospital and do driver duties for my darling daughter. So I did not trade today. I went to pick up my daughter, had some good time with her. So uh, as it is, the markets were not too tradable as well. If you look at the structure out here again, big double bottom formed out here. If you extend this particular line, you could have extended it, and market again taking time and again support from this particular trend line, but then stop loss would have been very big. One trade that could have been taken would have been the break of this particular low, uh, a trade on the downside, which again gave good targets. Post this, again, markets formed a good double bottom near yesterday's low and whatever these important swings which were there, and moved on the upside. And I'm assuming India VIX would have been also in negative today. Yes, -1%. In sideways price action, again, India VIX would not be of much use and not much use, but then again, it would be decaying and option buying would not yield good returns as well. So whatever it is, I had clearly mentioned to you to be prepared for this, right? It is not necessary that markets will give us a trending move every single day. That is never going to happen. But then uh, trying to understand when these phases can come wherein markets are trapped in a sideways move and you can get uh, momentum or a price action structure which isn't clear, which is kind of setting up traps everywhere, is something is which is also very important. And this is exactly what I had mentioned that till the time we are in between these two swings, there's two big candles on the opposite side of the spectrum, which were created on the budget day as well as the India-US trade announcement day. Uh, that is something which is creating this particular imbalance, and with time, of course, this will also go away, and then we will be getting in those clean trending moves as well. But then, till the time it is there, either you slip it out, do not trade, and wait for the air to clear. Whatever it is, this is something which was quite expected. But then, a thing to notice out here is even though markets are opening with a gap up, they are kind of drifting towards the lower ends, but then not giving us a closing below previous day's low, right? The low is not getting breached in the last 3 days, 4 days. And if you see the cash market data, even FIIs have been slowly and steadily buying in the cash market as well. So maybe if we connect the dots, this is simply an accumulation which is going on out here. But then whatever it is, we have to be prepared. I'll keep this video very short today. Nothing much has changed from yesterday's plan. We will have to slightly remodify this trend line. Yeah. And for tomorrow it as well, we will be keeping a simple plan above this last area of consolidation. We can look for a, I will reduce the size, thus people will think that the prices are going to get rocket after this. But then, of course, they can after a day's high is taken out and the market is sustaining. Maybe with some buffer, 26,020 odd levels, we can see some short covering as well. 26,000 would be a good point of interest being a round number as well. There would be a lot of people who would have shorted this particular strike price in the current expiry. You can go and check the option chain for the exact data, but then that is what happens. Our positions are usually built around uh, round numbers, and we can expect some short covering if this level gets taken out, and we are seeing some good sideways action. So maybe we, after this volatility contraction, we can see some expansion tomorrow. Let's see, let's keep our fingers crossed, but then this will be the simple uh, plan that I will be keeping. And my genuine, sincere suggestion to all of you, keep your positions light. Keep your positions light. Do not go heavy on your trades right now. Keep it light and simple. So yeah, that's it for today's Nifty trade plan. If you found this video useful, don't forget to like the video, subscribe to the channel, and hit the bell icon so you never miss a daily trade plan. I'll see you tomorrow with a fresh, clear, and rule-based Nifty setup. And remember, in trading, consistency beats intensity. Small, disciplined wins build big results. Trade safe, stay disciplined. This is your Nifty guy signing off for today. Cheers, and thanks for tuning in, guys.